heading into autumn, and a lot of families start thinking about college application, and now it's worrying about finance. After all, college is a very expensive endeavor for the family. So are there any ways that Kyros can help in understanding how you're filling out the FAFSA or CSS in order to get more financial aid, grants, scholarships, so on and so forth? And if so, how are you going to do that? Of course, FAFSA is also changing its policy. And now today, we are very fortunate to invite our longtime supporter of Kyros, our dear friend, Lindy and David here. Both of them are very experienced financial advisors and planners to share with us what are the changes coming up and how should the family think about filling out FAFSA and CSS during this application season.
When it comes to financial aid strategies, there is a lot of questions that is circulating among a lot of families and especially students. So Lindy, tell us, what are some of those questions and why are they so important?
Right. There are actually a lot of questions asked by parents like me, how much the college is going to cost. And even you have a younger kids, maybe now in first or second grade, you want to know 10 years later, how much the college will cost. That's the first thing come out of our mind. And then the second question we want to ask, how can we save for college, right? And then when our kids reach to closer to the age, like my daughter this year, she's 11th grade. So immediately I just know, okay, how can I apply for financial aid? What are the qualifications? What's the process? But prior to that, we want to know what's the strategies we can use and then how to calculate my family contribution. And most importantly, as you may or may not heard, by 2023, there are some major changes about the financial aid. So we're going to cover a little bit of that today as well.
Awesome job. Thank you so much, Lindy, for pretty much, stating all those questions. So now one of the most important highlights of today's segment is focused on the question that is called, how much does it cost? Because we know that the cost associated with colleges and universities across America today is on the steady rise. But in order for us to be able to really respond to this question, we always have to be able to pinpoint there is a formula and a strategy that you need to learn and apply in the financial aid strategy that can help determine how much are you going to receive in the form of aid. That formula is COA, subtracted from EFC, and that will bring you to financial aid needs. A lot of times, Lindy, people are confused by COA. This acronym can be quite confusing for a lot of parents. Why and how can you define COA in a much simpler term?
Yes, so basically parents just keep in mind the COA, cost of attendance, not just include the tuition and fees, and they also include the room and board and also the books and supplies. And if you borrow the student loan, the loan interest and fees, and also local transportation. For example, if your kids go to New York, and the flight from California to New York will not be included in cost of attendance. But when your kids stay in local, if they drive to school, if they use a bike or whatever, that local transportation cost will be included in this COA.
Absolutely. So with COA, there is so-called the direct cost and indirect cost. So currently, with the transportation and the expenses associated with your vehicle, your commute, that will fall in the category of indirect costs. But most importantly, the direct cost is primarily focused on tuition and fees and room and boarding. So that's something for you to remember. So moving on into different types of the financial aids that are offered to you. There is one called the need-based aids. What are they?
This is an often asked question. Parents are always confused. If we do a poll, probably a lot of people answer differently. So oftentimes when I ask people, do you need to pay back financial aid? Some say yes, some say no, some say depends. So basically people answer differently. That's actually depends is correct. It depends on what kind of financial aid you receive. If you receive a grant, you do not need to pay back. If you receive student loan, of course you need to pay back, but depends on whether it's a sub loan, it's an unsub loan, your payback time is different. If you are offered a campus work opportunity, that's just for your child to work in school, make some money, pay for tuition, of course that doesn't need to pay back. So the answer is it depends on what kind of financial aid you get. You either pay back or not. But you have no right to decide how much you get of which one. It's all offered by school.
Awesome. So there is a need-based aid, and that's based on the formula that I just shared with you. But then going on to what's so-called the merit-based, and what really distinguishes the two concepts, primarily with merit-based, is depending on the student's academic, athletic, and music excellence during the high school years. There's a lot of great scholarship programs and opportunities in different colleges and campuses across the United States today. So why not, if you notice that your child is excelling in these different departments, take advantage of all these great opportunities that are available to you from even some of the elite colleges. Even with Harvard, Stanford, Yale, you name it. They encourage the families and the students to tap into these very resources that are currently available. Hey, what if my child wouldn't get admitted into Stanford? That's not always true. So now, there is a formula, there is an acronym called EFC. EFC has such a powerful term, especially among the students in the financial aid board. Why expected family contribution is so important, and how we can really manage the EFC, Lily.
Well, EFC by its name is expected family contribution. We're going to dive deep later. So basically, that's how much your family are expected to pay. Just like you go buy a car, you never walk out of the dealer by the sticker price. So COA is almost like a sticker price for majority of the families. However, for those families, your EFC is already higher than COA, then you have no choice. You have to walk away with the cost of attendance price. And so basically, EFC, it depends on your family financial situation. If that we later on going to discuss with you. So basically, if your EFC is lower than COA, you will have a chance to get financial aid. In that sense, though we want the more financial aid we want to be able to get, we want to lower our EFC. David, someone say your voice is low. You may want to sort of like raise up your voice a little bit.
Okay, is it clear now, or can you hear me better?
Yes.
Okay. Awesome. So now we move on to the next step, which is called the aid application process. And this is very critical because in order for you to really fulfill your obligation as a parent or student and to receive the financial aid, you must go through all the steps as you can see on the slide. Number one, we must get ready all the documents that we have pertaining to our income, our assets, and anything that has to relate with the financial aid applications. Can you give us an example of that?
So basically, the document, actually prepare a document is almost like the latest stage. Before you prepare the document for planning for financial aid qualification, need to start very early, even as early as your kids is the 8th grade. Okay, So maybe sometimes even start when your kids was born, where you save for their like a college fund. Those are all related to how much financial aid you're going to receive at a later time. So when you are ready to file the financial aid application, you do need to prepare a lot of documents like a social security card, a driver license if they have, and the previous tax return form, all your investment statements, your bank statements, your retirement statements, and everything your family have, your rental property, your property tax, and all those documents need to be get ready before you fill out the form, because there are questions to ask all of this.
Wonderful. Now moving on to the next step, which is the applying early. We can never emphasize enough how important it is for our families to apply early, especially now that we are in the month of October, the season for us to file for FAFSA applications. So why is it that by applying early, we can maximize receiving aid?
Because the student aid is actually first to come, first to serve. It's not like a guarantee you're going to get it. Maybe two family has exactly same financial situation, but if you apply early, you may get more grant, which you don't need to pay back. If you wait until last minute, even you still get financial aid, maybe you get more student loan that you need to pay back. So we do encourage all parents file as early as possible, as accurate as possible.
Awesome. Now moving on to the third step, and that is reviewing the student aid report. This is where you have completed and submitted your FAFSA application and now has processed by the financial aid office. So when is the time or deadline for us to make any modification or changes to the FAFSA application, Lindy? And how many times are we allowed to actually make these corrections?
Very good question. So for FAFSA, normally after you fill out, you sign, both you and your kids signed, you submit, and within 24 hours, you are going to receive the student aid report, okay? So you can review the report. If you feel like that's something wrong, and you can go back to make the change. So literally every 24 hours, you can make one change. It's unlimited. However, the more changes you make, the bigger chance you are going to get audited. Basically, normally there is about 1/3 of the FAFSA form will be audited. When they audit, they will look at all the detail. They may ask you to provide additional documentation, your tax return form, your bank statement, and so on and so forth. So the school maintain the right to ask whatever additional document they feel like they want to get it.
Yes, so it's very, very important for us to double check, triple check the answers and responses to all the sections that pertain to your income and assets, as well as your personal information. Because the more you go back and make these modifications, it will raise the flag of suspicion, especially for the financial aid officers. And the way they operate at different colleges are very different. So you may want to pay attention to that. If you do not know how to correctly report your income and asset, make sure that you sit down with the professional or the person who have invited you to this event so they can give you better tips and strategy of how to do so. Now that we have received the student aid report, everything is in good order. Now we are going to receive our award letter, Lindy, and how we should evaluate this award letter and what are the chances that we are going to accept or deny the award letter based on what?
Award letter normally will given to the student after accepted by school, they will say congratulations, and you are accepted by our school, and then we offer you this it's a financial aid. They list your EFC. In the meantime, they will list the very detail about the financial aid, how much grant, how much student work, how much loan, what type of loan. They list everything there. Then you go in, you can decide, okay, this is a free money, I accept. This is a campus work, I accept. This is a sub loan, I accept. When there is other loan, I don't want to pay the interest, I can reject. You don't have to accept everything. You can accept some and reject others.
Wonderful. There is a question that may come up because
we don't answer the question now. Probably let's finish and then we do the Q&A the last.
No, I'm just asking a question, a hypothetical question.
Oh, sorry. Sorry.
Right. So,
I thought I'm trying to answer parents' questions. Sorry about that.
Because when the student files for the early decision, so when they receive the aid package, they may not be able to compare it with other schools because obviously the early decision may sort of incapacitate you from, doing the comparing with other packages that you may receive from other colleges because you normally must admit the, acceptance into that college. So is that true or not?
Well, for early decision, normally early decision, the application date would be the, November 1st. So most of the school will require you either submit your financial application at the same time, or the latest probably will be November 15th. So early decision is a bonding contract. And once the school accepts you, you have to take the offer. You cannot back off.
You cannot back off. So that's something for you to also keep in mind. Now, moving to step 5, that's when you receive the aid. And what is the timeline for that? And how is it processed?
So basically, you always want to review, your FAFSA. And FAFSA form, you do need to fill out every year. It's not like just the first year you fill out for 4 years. You have to you have to fill the form every single year. Okay,
but when you receive your aid package, the funds will be released in sort of associated with your tuition and costs and everything related has to do with your school for that particular year, right? Yeah. Okay, great. So I guess we are pretty clear on all these steps and the initiative that we must take in order to enjoy the aids that we are going to offer. So now this is very important. So now we are so much talking about, we have to go through the series of measures in order for us to be able to receive the financial aid. But how do you even apply? How do you even access these funds? Sure, a lot of you may know, and that has to do with the FAFSA application. This is a free application that is offered and designed by the federal government. And in order for you to have access to these forms, you can either go on the website or sometimes you can fill out these forms manually and post it via mail. But the easier and most convenient for our families by going to FAFSA.gov. And there you should be able to see the application in its entirety. And you can use create a username, password, and that's where you can really log in and make it operational. One thing I always suggest to families that you must create what's so-called the FSA ID. That is the identifying situation for parents, especially if you are the one who's claiming the student as dependent on your tax returns, okay? Because there is a feature that is on the FAFSA application is called the IRS data retrieval tool. In order for you to transfer over your information from your tax returns into the FAFSA applications, you must have your FSA ID. And that FSA ID can be either created for parent 1, in which a lot of cases can be your father, or parent 2, your mom or the spouse. So this is very, very important during this process. In addition to the FAFSA applications, there is something called the CSS profile that has been designed and offered by nearly 400 private institutions across America today. This is some form of grants and scholarships that is available to you and is offered from those private universities. Sometimes we receive questions concerning CSS, or we always have to fill out CSS also. Well, CSS is not always available at every college or campus across the US. It's only subject to those 400 universities. So you must find out which universities are participating in this program. Then you find out whether you or not have to fill out these forms. With FAFSA, it's pretty universal, and you can fill out FAFSA every year, just what the Lindy told you, and that can help you offset the high costs associated with college. As you can see on the chart below, the FAFSA application is free of charge. You can fill it out, submit it electronically, and it won't cost you a penny. But on the other hand, with CSS profile, there is a $25 fee for the application, plus one school that you are reporting on the application. And for each and every additional school that you are reporting on this form, you are subject to pay additional $16. But if you are in the low-income family category, that fee is waived. So again, what makes this so different is that the FAFSA uses what's so-called the federal methodology versus the CSS that they use the institutional methodology. And how your income and assets are computed on these two forms can be quite different. But one thing is very certain, that your information has to be identical on both applications. So whatever amount of money or income you have reported on FAFSA, that should be exactly the same on what you are reporting on the CSS applications. So please do not have different responses to every question on these two separate forms, okay? Anything else you want to add to that?
Yes, thank you. So basically, I just want to add a little bit for FAFSA. The date you start to fill out is October 1st, when your child turns to senior year. So for example, now it's 2021. If your child is already in 12th grade, now is the time for you to fill out the FAFSA. And the deadline is, for federal deadline is now June 30th next year. However, every state have a different deadline. For California, it's March 2nd. And then when you come to school, if you apply a different school, they also have a different deadline. So don't just say, oh, it's June 30th. I don't need to, worry about it, because June 30th is only for federal. So you have to make sure you do not miss the deadline. However, if you really miss the deadline, then you don't need to worry about too much. You still have a chance to file, do the late filing. If there is still fund available, you will still have a chance to get it.
Great, thank you. All right, this is very, very, very important common mistakes that we normally find on a lot of applications. And that goes to say for both FAFSA and CSS. So under the charge that belongs to FAFSA, we are looking at something called the incomplete FAFSA form. Make sure, folks, that you fill out the entirety of the FAFSA application and leave no question blank unless you are instructed to do so. There's a lot of questions on the FAFSA that may not pertain to you and your student, but perhaps it's already suggested for you to either skip that question or perhaps to explain briefly why you think that that question belongs to you. But just like what Lindy said, if you miss the deadline, the opportunity for you to receive the funds could be a lot lower. So in order for us the professionals help you maximize your chances of receiving financial aid, we need to fill out the forms prior to the deadline. The sooner, the better. As I mentioned earlier, something about the feature that is an add-on. The FAFSA application is called the IRS Data Retrieval 2. This gives you the opportunity to easily and faster transfer over all the information that is currently stated on your tax returns onto your forms. And that will help you delay a lot of waiting or a lot of mistakes associated with you filling out this information manually. Some of us may not know how to read the tax return forms. So this will make it a lot more convenient and more accurate in order to report your income and asset for those 2 preceding years. And of course, we know if you are putting the information incorrectly, so your application will not be processed and it will be returned for you to make those modifications and changes that is required. And most importantly, you must endorse and sign the FAFSA application. Now you can do it online and do the e-sign. It makes it a lot easier. So what about CSS, Lindy? What are some of the common mistakes with CSS that you normally find?
Yeah, so for FAFSA, I just want to call out, there are some states, if you want to qualify in-state grant, some states require you to list the in-state school on top. So if you're not sure which state have such requirements, parents, I suggest you to list your state's school on top in order to qualify the in-state grant. Just want to confirm with you, California is not one of those states. You don't need to worry about putting California school on top, okay? So for CSS, FAFSA has the same thing. I got a call just before I get on this seminar. Some parents call me, oh, which year I should fill out? So if your child is 12th grade now, when you apply financial aid, you need to click 2022 to 2023. It's now 21 to 22, okay? Of course, you want to enter your name, social security number, birthday, all those are correct. And those are careless mistakes. But there is a fundamental mistake. A lot of students report their parents' assets wrong. Okay, whether it's a business, you teach report under business. If you primary house, you want to report as a primary. You don't want to report the primary as investment. I do found one of the my clients that the boy actually got accepted by Harvard. It's a very good school, but because of his careless mistake, he reported their family house as investment. So that's $79,000. They didn't get a penny financial aid. Based on their income, they should get a full financial aid. So that was a pity. When I helped them to do appeal, it was already too late. The school doesn't have the fund anymore. So parents, we do not want to engage in any of this type of mistake. And make sure you answer all the questions clearly, even for all the numbers on CSS, because CSS has over 260 questions. They ask a lot of number. You can even find it on your tax return form. Just put a 0. Do not leave any question as blank.
Okay, wonderful. Now, this is a very important part because this one has to do with your expected family contribution. So we are going to dive deeper into this formula and how your EFC is calculated and why sometimes you may not receive the financial aid as you expect. So can you give us a brief overview? What are some of these numbers, Mindy?
So basically, just to keep in mind that there are 4 parts that consist of your family expected contribution, okay? There is your child's income, your child's assets, and also parents' income, parents' assets, as you, just you and your spouse, okay? So I'm going to talk more about parents' income, parent assets in terms of a student's income, a student assets. Some parents may ask, well, how can my kid have income? You know how some children work, and me being a financial advisor, I actually pay both of my children to reduce my taxable income because kids' tax bracket is a lot lower. So, you know, if you file Schedule C, your business owner, you can totally, you know, pay to your kids. That's one of the strategies. We talk a lot on our tax saving strategies. If you're interested in that, you can contact us. We're going to invite you back to our tax saving strategy talk. And in terms of a student's assets, they are like if any you know, saving under them, if you have any Ultima, or even you have like you know, cover down under their Social Security, that all will count as their assets. And the most importantly, parents, I saw some parents make such a huge mistake. They name their children as the trust, that whole asset, you name them as a beneficiary, and then the asset will count as their, you know, countable assets. Even you say, I have a house, $1 million, my child is a beneficiary, then that $1 million, 20% is already contributed to your family contribution. So make sure when your kids in college, do not make them as a beneficiary of an irrevocable trust. This is very critical. And we can talk more about the income in terms of a parent's income. David, let's dive to next page. It's basically 22 to 24% of your family, what? Adjusted available income. It's not your total income. They are going to make some adjustment coming from AGI, from your adjusted gross income. You can all find your AGI from your tax return form 1040 line 11. That will be your AGI in 2020. So using your AGI, all the deferred contribution will be added back, but they're going to deduct the tax you pay, deduct the living expenses, deduct the employment allowance. If your child is using institution methodology, all the healthcare will be deducted as well, okay? So after they make those plus and deduct and make this adjustment, it becomes your family AAI. Using family AAI times 22 to 47%. If you are confused, you don't know how to do that, you have a question, you're welcome to make a one-on-one appointment with us or with the people who invite you, and we're going to help you to do the calculation. So with that being said, I want to qualify more financial aid. I want to reduce my AAI. If I want to reduce my AAI, I want to reduce my AGI. Is there a way to reduce AGI? Then we need to know what are included into AGI. So basically, when you file tax, B, C, D, E are included in your AGI. So Schedule B will be only positive, is not be able to reduce the AGI for you, but CDE can help you to reduce AGI. Schedule D is your, you know, investment loss. If you have any stock, you actually have loss. If you sell that in the base year, and you can write off $3,000, $3,000 per year. And that's if it's 47%, you almost get $1,500 more financial aid. So for Schedule E is your rental property. If you have a renovation, you have remodeling, you write off some like depreciation. So you can totally make Schedule E negative if your AGI is low. Okay, if your AGI is above $150,000, you cannot make a negative Schedule E anymore. However, the best thing is the Schedule C. It doesn't matter how much your income, your AGI is, you can always make a Schedule C as negative. And that's how I started my own business. And if everyone, if any of you who doesn't understand Schedule C, who hasn't used Schedule C, I strongly encourage you to make an appointment. And with us, we're going to walk you through how the family efficiently file Schedule C to reduce your taxable income to help you with a college financial aid qualification.
Right.
Okay?
So basically, with the AGI, it's so important, especially for those parents. And if you are the independent contractor and you are on the 1099, the Schedule C will definitely help and get you to the place where you want when it comes to financial aid applications. As you can see, there are two different charts, and this has to do with your assets. In the previous slide, Indy focused on your income, because both income and assets are absolutely critical to the livelihood of your financial aid applications. What are some of the assets that pretty much stand out on the financial aid forms? And there are, such as the cash and saving, what you have in your brokerage account. That includes stocks, bonds, and mutual funds. Yes, the 529 saving plan even is counted as part of your reportable assets. And real estate, I'm sure a lot of our families have a lot of rental properties. What can we do about it? There are ways, strategies that can help you to sort of, manage your assets so much so that will become what's so-called the non-countable assets. As part of our strategies, we know that the retirement savings, including IRA, Simple IRA, SEP IRA, 401k, 403, 403b, and 457, especially for those of you that work for the state and federal government, those assets are pretty much under the non-reportable assets. But if we do have some cash on hand, what are we supposed to do? We do offer you some vehicles and investment strategies that you can use in order to transition those funds into what's so-called the life insurance, maybe long-term care, maybe annuity, maybe what's so-called the HSA. But these investment vehicles have to be quite structured well. Otherwise, it may not serve the purpose, because we are not just looking at the college planning aspect of these assets, but also helping you save money when it comes to taxes. Because sometimes it's not only the college tuitions that kill a lot of family because they're paying a high cost out of pocket, but it's always the taxes that can really drive families wild. And we're trying to really subdue and help you manage these unwanted.